there's a lot of noise about the Fed exploring 3 new mortgage alternatives to hopefully solve home affordability. It's the portable mortgage, the 50-year mortgage, and they're even talking about a crypto-backed mortgage. Now, I know that sounds exciting. It sounds like innovation, but does it really solve affordability? Whether you're ready now or just starting your journey, we're here to walk with you every step of the way. Hey everyone, welcome back to The Purchase Path. I'm your host, Des Losberg with Ascension Homes, where we don't just build homes, we build homeowners. And today's episode's a big one. There's a lot of media headlines out there right now. There's a lot of noise about the Fed exploring 3 new mortgage alternatives to hopefully solve home affordability. It's the portable mortgage, the 50-year mortgage, and they're even talking about a crypto-backed mortgage. Now, I know that sounds exciting. It sounds like innovation, but does it really solve affordability? Or does it just distract from the real issue that we need more attainable homes at better prices and better pathways into them, not extending out your loan another 20 years? Who's gonna pay that off? So that's what I'm gonna dive into today. And I'm also gonna share why here at Ascension Homes, we already solved the affordability issue with our programs, our prices, and the products and the assistance that we provide our clients. And that's what we focus on, actual functional solutions that help families today, not theories or theoretical ideas that could raise prices even further. So let's just talk about what they think the problem is. And they're talking about the problem being the 30-year mortgage. Now, for nearly 100 years, the 30-year mortgage has shaped the American dream. And for decades, it worked. People locked in stable payments, rates dropped, folks refinanced, and equity grew. It was the standard term for a mortgage for 30 years. But the reality in 2025, that more than 80% of American homeowners have a rate under 6%. And many of them are under 3%. Yeah, that was due to COVID and people locked in those historical low rates. We may not ever see those rates ever again. And that froze the market, because if you had a 2.75% or 2.99% and you're sitting on that kind of golden mortgage, you're not going to move unless you absolutely had to. And that creates a massive market freeze. And meanwhile, home prices still continue to grow. They're at near all-time highs. Inventory is still at all-time lows, even though it's kind of growing right now. And the average first-time home buyer is now 40 years old. It's the oldest in history because people just can't afford to buy a home. So yes, affordability is broken, but it's not because of the 30-year mortgage. It's because we don't have enough affordable homes and we don't have enough pathways to qualify for them. So let's talk about these Fed's miracle ideas or new ideas. The FHA actually talked about the portable mortgage, the 50-year mortgage, and the crypto-backed mortgage. And while each of them do solve something, none of them really solve affordability. So let's talk about the portable mortgage. What is that? What does that mean? And what they're talking about is a portable mortgage will let a homeowner take their old rate with them when they move. And in theory, that's genius. In reality, it creates 2 classes of buyers: the haves and the have-nots. So the haves are going to be at 2.75% or sub 3%, and the have-nots are going to have current market rates at 6% or higher. And portable mortgage would help some people move, but it would increase competition. And that would in turn drive home prices even higher. More demand, same supply, higher prices. It is fundamental economics. And for builders like us, it would make financing more expensive because securities, investors hate an unpredictability and they demand higher returns. And that feels like an affordability solution, but it actually increases cost for everyone else. So here at Ascension, our solution is simple. We don't rely on mortgage experiments. We build affordability into the structure of our homes. We build pathways into home ownership regardless of where the market sits. That's why we're priced at the price points we're at. We're anywhere from $250,000 to $275,000, and we're within 45 minutes of major metropolitan areas and huge job markets. So that's number one, just build more affordable homes. We have our creative options, like our lease purchase options. We give concessions to buy those rates down. Yes, does it dig into our margins? Absolutely, but we help homeowners get in to homes. Let's talk about the 50-year mortgage. Now, for us as a home builder, that sounds great. Like more people are going to enter. It's going to be more affordable. They can save a couple $100. So now people are more interested in buying a home, and that increases demand. So maybe our prices rise or we sell homes quicker. And yeah, it sounds like a solution. And yes, it drops a couple $100, but what's the cost? Did you know if you went from a 30-year mortgage to a 50-year mortgage, the borrower pays 86% more interest over the life of the loan? 86% almost doubles. And at worst, equity builds at a crawl. You're barely scraping the surface on paying that principal down. 10 years into a 50-year mortgage, you've barely paid that thing down. So sure, it lowers payments, but over time, it's going to trap people rather than lifting them in. And that's what we preach here at Ascension. That's the whole basis behind our name. We help people ascend to new levels because they can get into a home at an affordable price. They're paying down their mortgage even quicker, and then they can convert that home into a rental or sell it and then move into their next step home. We help them ascend to that next level. So here at Ascension Homes, instead of stretching your loan another 20 extra years, we price homes intentionally at $250,000 to $275,000. We give you temporary and permanent rate buy downs. That's what other people should be doing. We use seller concessions strategically to get that long-term payment down. And we have zero down pathways like USDA programs, down payment assistance, grants. We give multiple ways to get a yes without burying the home buyer into debt. So we attack affordability at the root, not by extending your mortgage to an age of 80 where you're handing down a debt to your heirs. That's how you solve affordability. Let's talk about the last option, which is that crypto-backed mortgage. And this one sounds really cool because crypto mortgages it's really creative. A lot of people have gotten rich off of crypto and they don't know how to liquidate or use it as a source of income. But really, crypto only helps a tiny fraction of people. It's such a small niche that most people who are in the affordable space don't really have cryptocurrency. They're not in that market. And crypto is so volatile, and when the collateral drops, margin calls happen. It becomes a systemic risk. It's not an affordability solution. And this does nothing for our target audience in that home affordable section, which is working class families, veterans, first-time buyers, renters, and households earning below the median income level. That's anywhere from $55,000 to less than $100,000 per year as a household. It's people trying to break into the market. They don't have crypto, at least not at the levels they're talking about to make things affordable. So at Ascension, we design our product for everyday families who deserve a seat at the table, not just lucky crypto millionaires. So the reality is this: with these three creative options that the Fed is proposing, it's just a political ploy to get interest, to show the public that the government's actually trying to do something about the affordability issues. But the reality is, it's not going to solve anything. The reality is these ideas boost demand and not supply. Because here's the truth that every economist agrees on, that more credit products means more demand. Same number of homes equals higher prices. And none of these new mortgage ideas increase supply. They don't add inventory. They don't lower construction costs. And they don't help someone repair the credit or reduce their down payment burden. If you want to make things more affordable and get more people into homes, open up the credit criteria, create grants, more available down payment assistance or forgivable debt, or grants, down payment assistance to home buyers who want to enter into that mortgage. So do you know what really does help? Building more homes that people actually can afford. Building systems that help them qualify, lowering the red tape and the requirements to build more homes. So that way we can provide more opportunities for our target audience, which is the working class families, veterans, and first-time home buyers. So that's what we do differently here at Ascension. This is where Ascension Homes is fundamentally different than everyone else. We don't wait for Washington to innovate some mortgage market creative financing option. We innovate locally where it matters. We use the tools that are in place now, not to gain more votes, but what we can do to get people into homes today. So here's how we help families become homeowners. 1, we build homes priced for real buyers, anywhere from $250,000 to $275,000 at a price point that payments are going to make sense, even with taxes and insurance. We have lease to own purchase options. So whenever we have a borrower who just needs a little bit more time to fix their credit, stabilize their income, save a little bit more, or become mortgage ready, we can place them in the home temporarily, and then they can exercise their option to purchase later down the road. This is not widespread in new construction, but it's a core of what we do here at Ascension. And we also use concessions to lower payments. Instead of a 50-year debt and put the borrower in 86% more in interest debt, we run numbers on 1, 2, 3-year temporary buy downs. We give concessions to do permanent buy downs. We do closing cost coverage, and we have USDA and down payment assistance options in the areas that we build. We've even seen temporary buy downs drop payments $300 to $500 a month and permanent payments $200 a month or more with the concessions we provide. So instead of extending out from 30 to 50 years, we just give a concession out of our own pocket to make that permanent payment lower overall. We also have created the Credit Ascension Pathway. We walk people through the steps to get mortgage ready. We remove errors, we pay down strategic accounts, we can help people become authorized users, establish new trade lines. It's no gimmicks, it's an actual road map. We build for the overlooked. We help the working class families, those entry-level buyers, and of course, our beloved veterans. And we are the builder who just says yes and tell people, yes, we can help you, and no, you're not a no right now. So here's the bottom line. Portable mortgages won't fix affordability. 50-year mortgages won't fix affordability. Crypto mortgages, that'll help a few. We need to build more attainable homes at prices that can be afforded, and we need to create real pathways into them, whether that's now, in the future, or giving people options and educating them on that path. And that's what we do here at Ascension. That's what this podcast is about. And this is what the purchase path is built around, helping you go from renter to ready to actual homeowner. So if you want to learn more, see our available homes, or join the Credit Ascension Certification Pathway, visit us at ascensionhomes.com. That's AZCENSION homes.com, ascensionhomes.com. And my name is Des. Thanks for being here. And remember, we don't just build homes, we build home owners. Thanks for joining. Please share this episode. Follow the Purchase Path now on Spotify, Apple, or wherever you listen, and start your journey with Ascension Homes. Your path, your purchase, your time.